David Faber's here. He joins us now with the latest on AIG. Earlier, David, it went from trading at 5 to trading at 2. Are there things going on this morning that people are catching wind of, or nothing? It should have never been at 5 in the first place.
Well, listen, you know, one of the advantages to being here late, as your colleague Carl and I were, is that we had news now that I don't think is even in the newspaper. Essentially dealing, of course, with those downgrades, but also speaking of people, Joe, as the night wore on, who are close to AIG, whose consternation was growing with every passing moment, essentially. You're dealing now with a company that has received those downgrades it was trying to avoid. On Sunday, trying to raise $40 billion primarily to avoid those downgrades. Got $20 billion that it actually already controls, but was able to move to its holding company as a result of regulatory moves made at the New York State insurance level. But as yesterday wore on, the numbers continued to grow. Why? Well, AIG's business started to erode in different areas as people have lost confidence in the company and started to pull money and things of that nature. Securities lending, for example, when you have collateral there's all sorts of different ways. I mean, we've talked so often about $1 trillion balance sheet, all the different connections that AIG has with the financial system. So business starts to erode, the number goes up. The Fed says we're not going to give you this bridge loan that you want from us to bridge you to asset sales that ultimately will return the kind of capital you need to withstand the pressure that you're currently under. And this is where we find ourselves today, with essentially J.P. Morgan and Goldman Sachs having been asked by the Federal Reserve of New York to figure out a way, figure out a solution. Yeah, that solution could be raising them $75 billion. The degree of difficulty of raising $75 billion without the true assistance of the Federal Reserve in terms of it putting up money is fairly high. We'll see if they can pull it off today. It will be quite something. That's the key story today. If unable to raise that money, and we were saying this last night, people close to AIG tell me they expect the company will have to file bankruptcy tomorrow.
Not too big to fail, then.
Tomorrow.
They'll let it.
And who knows? You know, those things move up sometimes. Yeah, at this point it appears that that the Federal Reserve is determined to let AIG figure it out on its own, a private market solution and or a bankruptcy filing.
They've looked into all of the tentacles into the whole global financial system. We know that this isn't going to be...
I have absolutely no confidence that is the case.
I mean, when they did the new cyclotron, that could have been it.
Almost every guest we had on yesterday said this is the one they can't imagine allowing to fail.
I know. Is there any way that these counterparty guys that are in the same business can be friends and say, take some time on the $14.5 billion and we're not going to do anything? Or
you mean in terms of the collateral calls that have come up as a result of the ratings downgrades?
Do they say we'll give you some time because it's
Why
in our best
would
interest?
you?
Because it's in our best interest.
No, because they want to be first because somebody else might go first.
The Euro guys will turn the screws because they're on the other side too.
I don't believe it's the expectation at AIG that people are going to be beneficent.
Nice to them.
So at $2, I'm not going to ask your opinion, but where it is right now, looks like it may happen.
This is an important day. There's no doubt about that.
They had an $8 billion offer.
Say again?
They had an $8 billion offer. Didn't you report that?
You brought that up. J.C. Flowers.
It's been awfully close.
Well, you're right. Now they may regret that, Michelle, if that was a real offer from J.C. Flowers. Who knows? But they need an awful lot more.
They may have a real offer from J.C. Flowers.
They need right, exactly. They need an awful lot more than $8 billion. Today is a crucial day in the history of that storied company.
Speaking of which, David, stick around. The state of New York is working on plans to ease the pain from Lehman's bankruptcy and AIG's liquidity issues. Joining us this morning is New York Governor David Patterson. He joins us from New York. Governor, good to have you on the program.
Good morning. As the author Bedard once wrote, when sorrows come, they come not single spies, but in battalions.
That says a lot.
Oh, yeah.
Especially this morning. Can you please give us any insight into what is going on at the table between AIG and whatever parties they're negotiating with?
Well, I think until they can reach a deal, and we are hopeful that they can, that the stock price is going to fall, that you're going to see further evidence of the credit default swaps, as you pointed out earlier, being a problem, and obviously their stock valuation went from $32.6 billion to $14 in just a very short period of time. But I think that is ancillary to the important issue that we have to recognize that AIG is not like Lehman Brothers. It is retail. It operates in 130 companies, has 116,000 employees. It has 74 million customers. This would be an effect on the entire market if AIG goes down. It affects jobs. It affects policyholders. It affects drivers. Even if you aren't a customer of AIG, you get in an accident with someone, there is an effect there. So this is a huge, huge situation that we're trying to confront.
You get no argument from us, but we're watching the stock price along with you, and someone is making a bet, or perhaps someone even knows that those discussions are not going well this morning. Is that true?
Well, I think that in the case of Lehman Brothers, for instance, Barclays took a look at it and pulled back because the more they peel back the onion, the more deficit they found, and I think that that sets a trend. But in this particular situation, if it's possible to put a deal together, I think that a lot of the indexes that you're referring to this morning would reverse. What we did in New York is we tried to clear the way for an opportunity for some kind of a deal by allowing AIG to collateralize its assets and then post those assets to come up with liquid cash. Their argument is that they're fundamentally sound, but they just don't have cash right now.
Governor Patterson, on that note, if they do fail, now you have made this decision that their insurance subsidiaries in your state now have less money to actually help with those claims. Are you going to regret having helped them out with that liquidity position if it turns out it doesn't actually help?
No, because the deal isn't done. In other words, we allowed them to access their $20 billion, but they haven't accessed it yet because the deal hasn't been struck. So if they're unable to strike one, no taxpayer or no resident of New York City is going to suffer in the least bit.
Have you called other governors around the country because they have to deal state by state with regulation? Could there be a collective response from people like you all over the country?
Well, I talked to Governor Corzine. I mean, there are 25 states that are in deficit right now. Those states have a $52 billion deficit.
That's right. They don't have money.
So it's not as if the states can come in and help anybody. And we understand that the federal government had to draw a line in the sand with Lehman Brothers the other day. But I think what's missing from this discussion is the ancillary effect of what will happen if AIG goes down, because it's not an investment bank. It really inures to the detriment of our economy in so many different ways. They have $1 trillion in assets. I know that that would have to reverberate in a lot of other areas, small businesses, mortgages, credit default, hedge funds. I mean, this is a catastrophic problem waiting if we aren't able to curtail it.
Governor Patterson, it's David Faber here. Beyond the balance sheet ramifications, which, as you're pointing out, nobody really knows, New York City right now dealing with Lehman Brothers bankruptcy, Merrill Lynch getting bought, AIG, if that were to happen. You're already strapped at New York State in terms of the budget. You're trying to make cuts. Tell me what the employment numbers going down like that's going to mean to New York City and New York State.
The employment numbers could go down another 30,000 on top of 11,000 that we've lost in the past year. Our budget, which we were able to cut $1 billion off of just in a special session of the legislature a month ago, and the legislature responded very favorably, but we probably lost $1 billion yesterday. When you recognize that every time the bonuses from the stock market go down 10% and every time the capital gains go down 10%, it costs New York State $750 million. So it's pretty bleak.
How much time do you think they have, AIG?
I think they have a day. But I think that this is the moment. We're in the moment right now as to whether or not they can put something together. I guess it would be $75 to $80 billion. Which is the degree of difficulty, as somebody said earlier, is pretty strong. But I think the federal government has tried to get involved. But I don't know if anyone is really understanding the ramifications of this crisis. We may not know it for weeks or months or maybe even years. But right now, we're in a terrible situation if we let the world's largest industrial and commercial insurance company go down.
And I assume, to the degree you can, as governor, you've leaned on the Fed to give a bridge loan. You've leaned on J.P. Morgan and Goldman to make this facility possible. Are you making those calls?
We're making those calls. I talked to Secretary Paulson yesterday. I talked to the head of AIG. I've talked to a number of individuals. My superintendent of insurance went down and talked to the Fed. We're trying, and we're trying not only on behalf of New Yorkers, but on behalf of Americans, because this is a very serious crisis.
Governor, we appreciate your time. Thank you for being with us this morning.
Thank you as well.
Governor Patterson of New York.